Welcome to TradeTheMBA.com. This is John, supporters for the 3rd of February. And well, we can see what I was talking about before. Usually in these initial decline setups, we reached that 50%, mostly because we were well above the 13.5. We dipped slightly below it, but we didn't get the confirmation of deeper sell from the Power Mode 2 trigger here of the magenta crossing above. And I talked about that the push would be to go back up to the highs. The question whether they'll be able to break through, looking pretty good. I mean, from what we see here on the DOC, we ended up with steel that had dipped under the 1, which I look for, with then the orange crossing below as a pretty good signal for us to look for buy configurations. And in fact, it's doing exactly that. We've also seen turnaround and shakeout. We never dip below the red line either, too, when we reach that 50% level, which is usually fairly bullish. Usually we dip below the red line, breaking the 50%, and that causes a bit more of a run to the downside of it. At this particular point, we've already pre-market got pretty close to the highs. That was around 38.62. We hit 43 already, and so far it looks pretty decent. Doesn't mean it's going to happen immediately, but we'll probably get a little bit more movement back and forth as it pushes up towards that, but nothing out of the ordinary from what we're looking at this particular time. And then, of course, the NASDAQ a little bit stronger. It's high all the way up there at almost 14, and it reached 84. So the NASDAQ, of course, has been the leader and continues to be so. Still a little bit weaker on the shakeout when you look at it relative to the S&P, so there's potential for that to move a lot stronger going forward. We talked about currency wars that would develop, and again, with the U.S. looking stymied on its stimulus, that's caused the euro to fade a little bit more, simply because, well, I would say because we have to return to right here, which we just actually just go ahead and mark it because it's easier to see it when you just put it in place. We look at the positive extreme, little red one right there, and then there you have it. So I want to say it's as simple as that, but in fact, that's exactly how the algorithms work. Make a move deviation and come back and fill it. And we touched it before on a wick move that took place, but this is definitely a much more significant play because it came back close to testing it and now actually fully filled it in place. And I've talked about the euro being outside of its normal range, and it was all based on the fact that the U.S. was going to stimulate way beyond the rest of the world, and in this particular case, it's not looking like that's taking place. And of course, without that, you don't have that impetus to push gold. Of course, you hear all the talk about silver and that from the retailers, but again, as much as the Robinhood stuff and that, it's like we talked about on GameStop here. They can handle things for a certain period of time, but like I pointed out here when we were looking at this real time, that this was the top. We ended up retracing all the way back down to fill the gap, just like I talked about. And then we talked about before, previous positive extremes that were going to need to be filled, coming all the way back down. And guess what? Oh yeah, that's right. We're exactly there. So as much as people think that there's outside play, we had buy signals that took place all the way from, well, when we look at it back here. Get that to stay on there for a second. So right around 87 was the last set of buys from before, and that shot up to your 400 and what was it? 483 was the actual peak high. But at that particular point, we could see DOC spread taking place right there. That's why I posted that one. Said that we would fill that gap. We in fact filled the gap, and then even when it popped up again, I was like, we've got another run that's going to take us right back to it. And sure enough, there we go. So predictable, absolutely. There's no other way to describe it. It's just simply the way the programs work, and you can fight against it for a little while, but ultimately the algorithms are going to take control over the situation and find those imbalances. And we already knew that the arbitrary value that moved that price up there was simply a function of dynamics and nothing to do with actual value, earnings, or anything else, which is much the case when it comes to how markets operate. And I've talked about that. There's an underlying value, but then there's the multiplier effect. And that's why we see where we're at with the market as it is now. We've talked about this as from a devaluation of the dollar. The market isn't going to accept that, so it's going to rise to accommodate that, irrespective of what companies are earning in that. It's simply about maintaining value at a minimum. Now, when you talk about getting a premium to that, that becomes a different story. So we started off the day on the 5K here, early buy. This was the day marker, is what you see the blue underneath there, and we popped up the little bit of weakness that showed, look at that, no response whatsoever from the magenta line, spiking back up to it, and sure enough, turnaround recovery, and shot up again, produced the exact same configuration. This one was a little bit weaker, and actually did produce a little bit more of a drop, but still pretty much a dead zero setup as we got to the peaks. But then we started to see a little bit more strident weakness here, and then we finally started getting the magenta pops coming up above, and so that was a signal that, okay, now we might actually start to see some more activity to a downside when we actually get the break. And here we had the orange spike, rejection of green, and cyan at the same time that the steel's crossing below. That was the earliest cursor point for it, and then when it finally broke free with the break of 13.5, that's why it turns red there, and sure enough, that led a move all the way to, the zero, and then created a whole new setup. Now, I would argue to you that, well, that's right, these are positive extreme levels right here, as well as right over here, and we're actually at 3809. Didn't quite get all the way to that one yet, so plenty of time for that to take place, right? It'll get there. It's just a matter of letting the individual signals react. And what happens is you get the imbalances. So they start a short, they find that there's still plenty of buy activity in there, and drives it to a new level until they've absorbed all that and are able to turn it around. And that's exactly what the algos are doing. They're just looking for imbalances, and this is why we see a lot of activity that takes place in what we would call after hours, but it's just the European sessions where there's lighter resistance and easier to make those moves and clear stops. So, and then usually the further up you get, the higher people move their stops, and that becomes easy to run them at that particular point, and that's when you get those downdrafts. So we'll continue to look for those, but as always, we'll put up any relevant charts as needed. Trade well. We'll talk in later.